Welcome to Technical Tuesday. This is Fed Razak, senior trading strategist here at CMTrading, and we're continuing our reversal pattern series. And today we're going to delve straight into head and shoulders. But before we start, make sure to like, subscribe, and do share, especially if you're new to the channel. So, head and shoulder formations, as spoken about before, is one of a reversal pattern. It's one of the more popular reversal patterns that come out there. Okay, so as a preface to this video, if you haven't watched the previous video on reversal patterns, I highly recommend it. It's a foundation to this video, it's the basis, and has some of the more common elements of reversal patterns, and should help you to kind of reinforce some of the information here, because I'm not going to review it here, but it should give some context to it. There are two major components when you're technical trading, when you use a technical analysis to trade the financial markets. Okay, I've said this before in most of the videos that I do delve into technical analysis, and that's trend and volume. The two components have to be correlated, okay? Otherwise, it's just very arbitrary, okay? So we're gonna first delve into the anatomy of the head and shoulders, and then we're gonna see how that pattern develops and what part of it is tradable, all right? So here it goes, all right? Here starts the initial ascent, okay, that uptrend, which develops into that left shoulder. Then we get to the head, which is a second extension, a retracement, which develops our second shoulder. And as a result of that, we've also set up a neckline, all right? So that's pretty much the anatomy of a head and shoulders formation, okay? On the bottom of the screen, you'll see that I've set up the volume corresponding to the major points, okay? So here we are at that initial state where we do have some volume, okay? And then continuation to point A, all right? That extension move, that first extension move that creates that left shoulder. We have significant amount of volume, okay? We then have a retracement that is actually an increase of volume where it dips below, okay, significantly. And then we have the extension to point C, all right, which is our supposedly strong extension. The reason I say supposedly, because if you look towards the bottom that correlates to the volume, it's actually lower than the previous sell-off. That's the point of the reversal. The reason being, okay, is that the extension is somewhat disingenuous. And the reason it's disingenuous is that I would have expected higher volume to lead me to higher heights. I wouldn't have expected the volume to go down, okay? And that shows me that the market is not so interested in this particular asset, even when it's making new highs. Now, at the next extension downwards, if my volume increases, that's my point of where I get my confirmation that this is truly weak. So at the next point, okay, which is right there, a point E, that's my point of where I'm looking for it to go short, okay? And then I extend into my last leg where I see the increase in volume, all right? So this is a very classical type of head and shoulders, okay? There are a few points here. Number one, the left shoulder should be a little bit higher than the right shoulder, okay? That's number one. Number two is that this formation could be used on multiple time frames. And as I've stated several times before, the longer the time frame, the stronger the pattern. Okay, so with that said, this is really a mirror image of itself, right? It's almost smack in the middle by the head. If I took a mirror on both sides, I'd see a mirror image of itself. And that is what constitutes part of a reversal pattern, right? That's just one of the components, that's one of the definitions. Now, this pattern could also be done upside down, all right? Which it looks something like this, all right? Where you still have your left shoulder, you have your head, and then you have your right shoulder, but the components are all the same amount. The volumes are all the same amount, right? They all correspond to each other. And this reversal pattern, like I said before, happens almost across the asset base. I've seen it by Forex symbols, I've seen it by commodities, I've seen it by stocks, and it's quite common for the market to react like this because the reaction, okay, in the market is very genuine when we're looking for extensions in the market and a reversal pattern. Thank you for joining me for this Technical Tuesdays. We'll see you here next week.